Hey traders, Raghee here. Welcome to Charts and Coffee for Wednesday, September 8th. Great to see everybody. All right, so we have this shortened week, and one of the things that we wonder when we have the Monday off is whether the Wednesday is going to ultimately be the turnaround Tuesday. And a couple interesting things on the radar as we kick off this second trading day of the week. And that is, are we starting to see a little bit more risk appetite? I know a lot of folks are wondering when we're going to pull back, but I like to look at the way that defensives are behaving, XLP, XLU, while certain more high beta, high momentum corners of the market, indices like the SPY, the QQQ, and other tech sectors like XLK and XLC are rallying. Now, I'm not going to just let a single session determine, oh, we're in some sort of rotation at this point. We really have not seen rotation. We've seen lagging corners of the market begin to join in, participate with the overall risk appetite. But at the end of the day, could rotation rear its ugly head? It may not be that ugly, because the fact of the matter is, if we do see the defensives moving lower as they did yesterday, and we continue to see strength in tech, and we're going to take a look at financials today, as well as healthcare didn't pull back enough. But we're going to take a look at some of these corners of the market that aren't tech but are participating with the overall strength in the SPY. Think about the index sector stock, right? Think about the structure of not only the broader index, but also the individual sectors that are heavily weighted within the index. And that's where I'm, kicking off this Wednesday session, thinking about getting ready to hop into the Sector Secrets Mastery, do a little day trading as we do. Love those zero dated Monday, Wednesday, Friday options. That syncs up really well with what we do in that room, and take a look at what the short term might bring us, and then also start then refocusing on what the longer term trends still are. So love managing both those durations. Okay, let's jump into the first question. Hey there, Peter, looking at Riot. Okay, Riot is not participating with Bitcoin. So if you're going to play into these proxies for Bitcoin, Mara and Riot come to mind. So if you're going to play into these proxies, make sure they're tracking with the touchstone for the movement. In other words, if they're not tracking with Bitcoin, don't worry. I won't pay any attention to them. And frankly, Mara has been better than Riot. So that's really your litmus test. That's how you would know beforehand. Ooh, do I want to play Riot? Does it look like Bitcoin? Move on to the next stock. So I would say no to Riot, yes to Mara. And RBLX is a very new stock. So when I look at anything that's just had its IPO, there's two things I'll do, Peter. I'll anchor if I'm going to play them at all. First of all, we need to know, is it a traditional IPO or one of those DPOs? Because the difference being whether or not there's a holding period and a quiet period. If it's an IPO, there's a holding period and a quiet period. And then it's actually easier to understand the psychology of an IPO, initial public offering, than the direct public offering or the direct listing or whatever the heck they call those. I find DPOs just flat out shenanigans. I don't like them. Why? On day one, insiders can sell, and they do. DPOs have a nasty habit of a lot of selling on day one. So that their behavior is very different. So determine that, and this is just a process for any kind of PO, right? DI, whatever. The next thing is anchor the VWAP on the born on date. So that's the next thing we're going to do. And then look at where we are in relation to that VWAP and know whether you're past the quiet and the holding. And you can find all the information out typically at the exchange, what those two dates are. And then it's structure. And then it's finally structure. And I don't love the structure here. I don't know that I want to short this market, but I know that I love the structure. We've had a very brief period of time where it was in an uptrend. So says the telltale JT Multi. And now it's just chop. So now it's time to put, say, a slow stochastic or a ready aim fire on a market like this when it's yellow. And As long as the chop is wide, overbought, oversold oscillators are going to be perfect. If the chop narrows up, how do you know? Blue grab candles. When it narrows up, now you're talking about the transition from RAF to squeeze to a potential momentum breakout. And that looks to be maybe where our RBLX is heading. I have no skin in the game, not gonna, but keep an eye on some of the volume ledgers as well. But that's what I see on those two names. All right, thanks, Peter. Hey there, Melissa. Good morning. ITB. All right, so the question is, ITB is setting up for a buy. I wouldn't short it, but so ITB and say XHB are going to travel down. All right, maybe not on the same path, but certainly the same direction. And I would say favor XHB over ITB, Melissa. So why? Well, JT Multi, take a peek. So when you're looking at the JT Multi and you're asking yourself, do I have structure that's bullish? Do I have a structure that's going to lead me to higher probability and path of least resistance to the upside? I think that narrative is probably a little bit clearer in XHB. And we have some nice propulsion dots. We have a sinking into the wave. The previous time we have sank into the wave, notice that we did get a little deeper down into the 34 EMA, the middle line. So I won't be surprised if we see that again, but we are in the buy zone on XHB. So right idea, just kind of tweak it and go with the XHB. And if you want to know the difference between the two, well, you know what? Let's do this for a second, because we do this in the Sector Secrets Mastery, which is, we use the passive investing universe to really fine tune our watch list to get true, great, clear, relative performance just to the top. And sometimes we have two ETFs that are similar, but different enough where, so for example, at the surface level, they have roughly the same amount of holdings. There's 1/4 more stock in ITB. So another thing that XHB is very clear when you start looking at the holdings is XHB is not a high concentration weighted ETF. Take a look versus ITB. If you're looking at ITB, Melissa, the first thing you say, this is pure index sector stock. This is straight up what we do in Sector Secrets. DR Horton, DRH, and DHI, and Lennar, LEN. That's ITB, right? You add in NVR, you add in Pulte. My gosh, those first four names in ITB, that is the ETF. You don't have that same high concentration weighting in XHB. When you don't have a high concentration weighted ETF, I would play the ETF, not an individual stock. In the case of ITB, I would actually say thanks, but no thanks, ITB. What's going on at the DHI, LEN, NVR, PHM, maybe even SHW level? That's the way I like to do it. And you get a natural relative outperformance scan without really looking at unrelated stocks. You're looking at stocks that don't see. Look, when you're looking at a scanner, which is fine, but when you're looking at a scanner, you're looking at stocks that are being lumped together because of their behavior. When you do a scan like this, you're looking at stocks that are lumped together based on a similar niche, a similar sector. They're affecting one another. I don't really want to lump things together because they share a similar technical behavior. I want to know, are they swimming in the same pond? Are they related to one another? Are they in that same group of stocks that tend to move together? So it's a little bit of a different way to scan, but that's how we do it. So I hope that helps, Melissa. All right, next up, Alex, looking for DG. Okay. Pullbacks. DG, Dollar General, Alex? No pullback conversation here, my friend. We broke the double green, right? On earnings, and post earnings, it's chop. So it's really an overbought, oversold. And I know that might just sound like semantics. I know you know how we scan in this room, but this is not a pullback market, is it? It's really more of a oversold, slow stochastic, ready, aim, fire type of conversation. So Now, what we have to remember is that it's a non-trending market. Now, what you could do, and I love what you said there, right? I love what you said. So what did he do? He followed it up with DG got me interested, but Walmart has better structure. So Alex has been here for a while. He's one of our regulars, as I know a lot of you are. And a lot of you will find out, as Alex is just sharing, that sometimes looking at a particular stock then leads you to another one with better structure. And that's where Walmart is. Now, Walmart also, as you know, lumps us into XLP. So again, just a little bit of a stock exposure search, a little reverse search for, where is Walmart hanging out in the stock market? Mostly in XLP. Who is it hanging out with? The only problem I think you're going to find, Alex, is that the tide, it might be problematic in terms of what's happening in XLP. So then that gets us to, let's see what we have here. Okay, that gets us to looking at, let's pull up our multi-chart for XLP. That gets us looking at really strong relative outperformers. So that could lead you to PG. That could lead you to Walmart, as you mentioned. Mo for sure. Mondelez would be a big cup of nope, although it's very tempting to look at a inside day, maybe minor low around that 200 prop. Costco looks great. So there's a lot of stocks that look very, very good, including Walmart. Not Coke. Pepsi, maybe. So just be careful, because if we continue to see staples struggle as high beta, high Momo, the sexy stuff in the market continues to rally, as we talked about their onset of the show, staples, utilities, the defensives may not get as much attention. Where attention goes, money flows. If it doesn't get that attention, we might see these individual stocks having to work a little bit harder than they normally would have to. So keep that in mind. I love what you said there. Started off looking for DG. I agree with you. Nada, but Walmart, and then digging deeper into the XLP. Love it. Good stuff. Really good stuff. Andreas asked, what do I think about heating oil? Let's do something a little bit different when it comes to heating oil. I like doing this with commodities. And let's ask heating oil, what kind of market trend are you in? And let me see. I think I can pull heating oil up on Season X here. Okay. What type of personality does heating oil have? Because a lot of times it seems very normal that going into the winter months, I know it's only September, but going into the winter months, we would think that heating oil would typically have a type of uptrend, right? Seasonal uptrend. But the fact of the matter is, a lot of the preparation for winter demand happens in late summer. So it's actually the closer we get to the seasonal demand, we typically have already seen the ramp up. Now, that's not always going to be the case. Here's a 5 versus 10-year composite look of heating oil. But you can see the ramp up starts through summer. Now, in this case, we could see a little bit of a pullback going into late October, November before we pick up again. But a lot of this is going to have to do with how severe the expectation for the weather is going to be. This is where the EIA can really move heating oil with upgrades or downgrades in what's known as the heating degree days, the HDD. So in terms of, and I'm just trying to find the symbol on, I pulled this up on TradeStation. I'm trying to find the symbol on, I guess we can look at UOH. What we want to remember is that it's not a super liquid name. It is very weather and seasonally sensitive. And it's also going to track with crude, because remember, RBOB gas is a product of crude. Heating oil is a product of crude. So keep an eye on crude. Crude and heating oil should track a lot very similarly. Just be careful, because news, weather can affect heating oil. All right. As far as how would I play it, there is not a liquid ETF. It would have to be futures. I haven't looked at the option chain in a long time. I will tell you, I don't play heating oil that often. I'm usually in crude. I'm usually in RBOB. We're in natural gas, but I usually don't play heating oil, quite frankly, all that often. But you're going to have to play it with the futures. And if the strike you're interested in has sufficient open interest, then you can play the option on the futures contract. Yeah, absolutely. And I do play options on the futures contract. That's one of the choose your own adventures side of looking at markets broadly. Do I want to play the stock, the option on the stock, the ETF, the option on the ETF, the index, futures, ETF option? Or, so that's the choose your own adventure. That's one aspect of that overall mindset that is choose your own adventure. It extends to asset class choices, it extends to position sizing, it extends to risk management, right? Which is there is a certain part of trading that has to be customized to your account size and to your risk tolerance. And so that choose your own adventure. And I think Trish is working on it. For those of you that are unfamiliar with that turn of phrase as it applies to the market, you might remember it from books when you were a kid. Totally dating myself, but I love those books, the Choose Your Own Adventure books. So Trish is working on a series about that for the Countdown Trader. If you haven't checked out the Countdown Trader at countdowntrader.com, please do. It's quite literally a resource of a lot of the concepts and philosophies and tactics that we talk about here in Charts and Coffee. Everything from Dow 1, 2, 3s, from the way that I play earnings to indicators. Check it out. It's really, frankly, just cracking my brain open and putting it in a blog. So if you haven't checked it out, countdowntrader.com. Is the JT Multi included in the bundle for TradeStation? Yes. Yes, we do have JT Multi for TradeStation. Is it in the bundle? It should be. If it's not, I'll update it. We've got JT Multi for TOS, TradeStation, and for TradingView. And yes, there's a few tools that are not available for TradeStation, so it's easier to tell you what's not than what is. Almost everything is. HPMRs are not available for TradeStation. The updated Darvis signals, not available for TradeStation. The updated V-score signals, not available for TradeStation. But the original Darvis and the original V-score are on TradeStation. And then everything is available on TOS. Everything is available on, maybe except for V-profile, but that's not really a big deal. But everything is available for TradingView. And one way or the other, whether it be, now, by the way, if it's not on the list, if I've told you it is, for example, multi is going to be there and the volume labels, those are smaller, indicators, I will add them to so by the time you join me for live trading on Friday, I will sit down, update what is going to be available. But the volume labels for TOS and TradingView will be available, and the JT Multi for TradeStation will be available. So really, it's everything except for the HPMRs. It's everything except the HPMRs, okay? As far as the tools that I have available right now, everything except HPMRs. All right, so hope that helps. And looking forward to seeing you all on Friday for the live trading session. So if you haven't checked that out yet and you're interested in the tools that you see on my screen, it's simplertrading.com/Raghee-workspace-bundle. All right. Thank you for the question. All right. Love some Natty. Yeah, Michael, that's been a really good corner of the market for us. We've been playing it through UNG. It looks to be kind of clarifying its trend again. Little pullbacks don't bother us. We've got a trailing stop in place because, well, we've had a heck of a run since we entered it back in mid-August. And now, and I think I did a free video. For those of you that are not familiar with the way that we entered Natty last Friday, I did an update on how we're managing. Look, exits are huge. I was just talking to Trish about this. And for those of you that are perplexed by exits, and it's not just targets that are exits, it's stops that are exits as well. We're going to have a focused discussion, a concentrated discussion on exits. We all know about entries. Indicators are about usually entries. We like new strategies that are all about entries, but let's face it, you make money when you get out, right? Exits are the thing. And we're going to have a webinar, I think, in about 3 weeks, first week of October, I think, and then a class coming up in October where, yes, we're going to talk about the sector approach to the market, but with an emphasis on exits. Really looking forward to that. I love talking about exits. Stop losses keep you in the game. Proper place targets are what keep you profitable. So very much looking forward to that. I'll tighten up the indicators that I know that are supposed to be included in the bundle. Volume labels will be there for TradingView and for trades for Thinkorswim, not TradeStation, and the JT Multi is available for all three. I'll make sure that's in the bundle downloads. All right, so I'll see you all Friday for that. See you all tomorrow for our next episode of Charts and Coffee. All right, get out there. Caffeinate, dominate. I'll see you all tomorrow. Be good to each other.